Ladies and gentlemen, my name is Greg Michalowski for ForexLive.com. This is a Forex Technical Preview for the week starting November 17th, 2014. Let's start by taking a look at the Euro versus US dollar. This is a daily chart for the Euro. And what do we see in trading here this week? Well, the market came down toward a low price of 123.93. That was higher than the low price from last week's trading. We in trading here today, we came down to a low of 123.97.7. Not able to take out last or the week's low, and so we saw the market rotate to the upside. From a bullish standpoint, we moved and it looks like we're going to close above the 125 level. That level corresponds with the October 3rd low. Staying above that level in early trading next week will be a bullish sign for the Euro. That's going to be my early line in the sand for the Euro. Stay above it, more bullish. Where can we go? This topside trend line is an important level. This level connects a number of different highs right through here, and that level is going to come in around the 126.19 level. Remember that level, 126.19 on Monday's trade. If we move above that, we're going to be looking toward the 127.46 and 57 level. That corresponds with our high prices right here. So let's go to the hourly chart. If we take a look at the hourly chart, we really had a non-trending week until today, where the market broke to the upside. The range for the week was only about 115 pips through this box right here, and in the last few hours we were able to squeeze higher and make something, well, a respectable week as far as the range goes, at least, moving up to a high price of the at the 127.45 level, and made about 150-155 pip trading range for the week. So not a bad week, but certainly much better than what it could have been. In the process to the upside, we did move above the 100 and 200-hour moving average in trading here today, and the squeeze was helped by the ability to hold against that 200-hour moving average here. Staying above that level was bullish, and that helped push the market to the upside and get above our resistance levels at the 125 level, the 125.08 level, the 38.2% retracement at 125.14. So in early trading next week, once again, I'm going to be watching the 125 levels for support. Stay above that level, that would be bullish. Move below it, and we might come back down and test our 200 100-hour moving average on the downside. On the top side, we'll be looking for 125.63. That's a 50% retracement of this move to the downside, and then look toward the 61.8% retracement at the 12 level. Remember that 126.19 level, that's near that 12 level. That's going to be a key resistance on the top side as well. Let's take a look at the sterling versus US dollar next. On the daily chart, we moved sharply to the downside. This was on the back of the quarterly inflation report from the Bank of England that showed that the expectations for GDP and also inflation were lowered by the Bank of England, and that sent the pound sterling sharply to the downside by about 350 or so pips in the process. In trading here today, we moved below this trend line right here, but as you can see, we're bounced back toward the 61.8% retracement of the move up from our low going back to 2013. This is a 2013 low. This is a 2014 high. The 61.8 comes in at 157.20, and a move back above that level will be more bullish here for the pound versus US dollar. Looking at the hourly chart, that 157.20 level, this was the level here, and we went below it in yesterday's trade and then corrected right up to it before falling back to the downside. So the market remembers that level. It has that level as a key resistance level. Also close to 38.2% retracement of the move down from this week's high down to the low, right around that 20 level. So that's going to be a key resistance level if the market's able to keep the bullish bias in trading early next week. On the downside, we'll be looking for support against this cluster of support against underside of this broken trend line here, also against this old trend line right here, which we fell below it here and here, but reestablish that support here. So we'll be watching this area on Monday for support. That level comes in at 156.50, and again the 157.20 to 26 level, key resistance on the top side for the pound versus US dollar. Let's take a look at the dollar versus yen. I'm going to put it on a weekly chart because this market's really been surging to the upside ever since the Bank of Japan surprised the market with that the extra stimulus. Markets moved from about 105.537 to a high price or this week of 116.81. huge move to the upside in a very relatively short amount of time. In trading here today, we made that high of 116.81 and then started to rotate back to the downside. You can see that on the hourly chart. Had a little resistance up here against the topside trend line. We actually moved through that level only to fail. No closes above that level, and that helped push the market to the downside, as did the squeezes in the euro and the squeezes in the pound sterling, the squeeze in the dollar all overall. On the downside, we have support against this trend line, which we're going to be watching in early trading next week. Comes in around the 115.19 level, and then watch the 100-hour moving average. We did trade below the 100-hour moving average in this period right here, but other than that, going back all the way, maybe to right here around October 21st was the last time the market had closed below the 100-hour moving average. No closes below it here. No closes, well, we had the closes below it here, and in trading here, no closes below it, although we did move below that level. So the 100-hour moving average is going to be a key level, 115.63, if we're able to rotate to the downside. So watch that level. But first support is going to come against this trend line right here at around the 115.91. On the top side, get above the high, get above this top side trend line. It's open door to further gains to the upside for the dollar versus yen. Remember, they may delay that sales tax increase. That should be bullish for the dollar yen, bearish for the yen. We will see the reaction. The market is largely expecting that, or starting to expect that. So we could see a buy the rumor, sell the fact type of thing. Got to pay attention to price action. New Zealand versus US dollar. What do I see in this chart? Well, I see, speaking of the 100-hour moving average, that in trading this week, maybe I think we had 4 hourly bars that was below the 100-hour moving average. In trading here today, we found support against that 100-hour moving average, actually moved a little bit below it, and then quickly moved to the upside, and then found that the sellers turned into buyers here and pushed the market to new session highs, new week highs. Off the daily chart, that move to the upside took the price above this trend line here. This trend line was part of what was a bear flag here. So we have flagpole here and consolidating with a little uptrend. Fell below that level here. Should have gone lower. Did, but not that much, at least not what you expect on the bear flag. And the market rotated back to the upside. That trend line comes around the 78.80 level. Stay above the 78.80 level, and we could see the market start to rotate higher. The first stop would be our high price going from the month of October. That comes in around the 80.34 level, and then may get up to the 81.08 level. Currently trading at 79.07. Again, watching this trend line here around the 78.74. If we move below that level, it just takes some of the bullishness out of the market. Also, we're going to be watching down below the 100-hour moving average, currently trading at 78.38 level. That's the New Zealand versus US dollar. Oil prices got smacked in trading this week, but off the daily chart, the low for the day came right against this bottom side trend line, connecting most these lows right here, and the market found support against the 71.16 level, closing higher on the day here for crude oil. So a quick rebound to the top side. We are running into or looking toward resistance here around the 76.45 level. However, that level is key. Why is it so key? Look at this floor right here. Low right here, low right here, low right here, low right here. Break the floor, come back up to it. Where's the 100-hour moving average? Where's the 50% retracement? Right at that level. Is that level important? You bet. So we're going to be paying attention to that. As long as the price remains below that level, the bias remains to the downside. And gold got a huge boost to the upside in trading here today. Maybe been one of the catalysts for the dollar getting smashed. Gold was lower in earlier trading, and then started to move back above the 100 and 200-hour moving average. That move to the upside took the price above trend line resistance. I'll put it in right here. Boom, there you go. Nice little trend line coming across there. Moved above that level, came up to the 38.2% retracement in the high right here. Found some sellers against that level and rotated all the way up to the 50% retracement at 1193. That 1193 level is going to be a key level for gold. Stay below it. It's more bearish. Move above it, and we're going to see further squeeze to the upside in gold with the 1200 level, 1208 as our next target on the top side. So there you have it. Look at some of the major currency pairs and oil and gold as well. My name name is Greg Michalowski. Good fortune with your trading. Have a great weekend. Bye-bye now.